Hi folks, you're welcome to our next video session on FX Papping Institute. Now folks, in this video I'm going to be teaching you guys how to identify swing lows and swing highs in the marketplace. That is what a swing high and swing low truly is, and also what makes a swing high and a swing low. So this video is really going to be insightful, and is going to be filled with a lot of information. So please, I would advise you to subscribe and share the link to your friends, to all those who are really interested in learning forex, because in my video series we are really going to cover a lot. I'm going to be taking you guys step by step on every single detail about the forex market. Okay, so let's move further. How to identify swing lows and swing highs. Now folks, before we know how to identify them, we have to understand what are swing highs and what are swing lows. Can anybody take a quick guess? Oh, my bad. You can't guess because most of you are newbies. Let's move further. Now, the textbook definition for a swing high and a swing low is as follows. A swing low is when price makes a low and is immediately followed by two consecutive higher lows. That is, the higher lows are represented by the candles, but I will in the next example you're going to understand what they truly are. Likewise, a swing high is when price makes a high and is followed by two consecutive lower lows. Let's go to an example on a picture chart right here. Alright folks, take a look at this chart. You see it, right? You can see all the swing highs and all the swing lows are all marked out right there. Now I want you to take your time to really look at this picture right here. Take your time, look at this picture right here. This is NZD USD, New Zealand dollar versus the US dollar, and this is a 15-minute chart. Now I'm going to be showing you guys swing lows, proper swing lows and swing highs, and I'm also going to show you how they are going to be used as your advantage in trading. Now folks, please, whatever example I show to you guys here is valid to all time frames, not just only one time frame, because swing lows and swing highs, they always form in the marketplace. Okay, so guys, let's proceed. Now guys, let's take note of this first low that was created here, this first low right here. Right here, that is a low as well. That is a low. It's a very nice low. Okay, I'm marking that out with my trend line. Alright guys, now remember the definition of swing lows and swing highs. Now I said a swing low is when the market makes a low and is followed by two consecutive lower lows. These are your lower lows. These two candles, this is your low, this is your low, this bearish candle right here, that's the low, and then it is followed by two consecutive candles. Now it can be three, it can be four, it doesn't really matter, but all that matters is that For this low to be confirmed as a swing low, there must be two consecutive candles following it up as a swing low right here. This is not a complete, this is a very beautiful swing. It's a very beautiful swing. This is a swing low right here. Okay, now let me show you some other examples. Okay, now, okay, take a look at this low right here. Yeah, this one, it's also a swing low. Okay, it's also a swing low right there. Look at it right there. You can see that it's followed by two consecutive candles. In fact, they're even up to four. You can see that, right? You can see that they're up to four. Let me give more examples. This one right here, this low right here, it's also considered as a swing low as well. Okay, because as you can see, it has like two consecutive lower low candles. Okay, now take note. I would say this and I would say this again. Okay, I would say this and I would say this again. Now, this is a swing low. All the examples I'm showing right here, they are all just examples for swing lows. Okay, now now when you have a low, there must be two consecutive lower lows, which is first, the first candle that will be identified there will be a bearish candle. It's not going to be a bullish candle. As long as it's a low, the first candle to start that swing is a bearish candle for a swing low. Now, after you have a bearish candle, you now have two more bullish candles, two or three. Okay, no matter the number, but it must be two more bullish candles following it up. Okay, that is what makes it a swing low. As you can see, the three examples I've given to you here, just take a good look at them. You can even screenshot them if you want to. Okay, take a good look at them and then go into your charts, make some examples, and go into your charts, uh, uh, look at the candle formation, look at the lows, and then look at the highs. Trust me, you'll be able to identify them. Okay, now folks, let me show you something else. This low right here, this low that you see right here, just take a look at where this cursor is, this crosshair. This low right here, this is not a swing low. Okay, this is not a swing low. This is not a swing low. This is a failed swing. Okay, now you see the market, it's brought down this one. It brought the next bullish candle. If there was another bullish candle before the market started dropping, it would have been considered as a swing low. Like, take a look at this one back here. This one formed its two consecutive candles before it continued to drop. So which makes this a swing low? This is swing low. This is swing low. This low right here, this is not considered as a swing low. But this area is considered as a swing low. Let me mark that out. This area here, because you have your bearish candle and then you have your two consecutive candles. So that makes that a swing point. Okay, please take notes. This is not a swing low. Write this down in your notes. Okay, write this down in your notes. A swing low must have two or more consecutive candles, two or more consecutive lower lows. Okay, those lower lows are the next candles. That is, a swing low must have a bearish candle and two more bullish candles following it. That is a swing low. Okay, this is a swing low here too. You can see this, and then you can see this move here. Okay, this is a swing low as well. This is a swing low. This is a swing low. Yes, here. Here too is also a swing low. You can see this move. Here is a swing low, and here is a swing low. Okay, now let's go to the swing highs. Now, remember the definition for swing highs. It's just vice versa for swing lows. Now, for a swing high, you must have a high, a bullish candle, and then you must have two bearish candle following it as well. Now, look at this high here. Look at this high. Look at this high. This is a swing high. This is a swing high. This is a swing high. Okay, that's a swing high. Okay, let me give you more examples. This here, it looks like a swing high, but this is not a swing high, because we have only one bullish candle but and only one bearish candle. It must have at least two bearish candles following it. Okay, but look, so this is not considered as a swing high. Okay, this is not considered as a swing high. It's just a regular high. Okay, coming down here. Okay, this point is a swing high. This is a swing high right here. Your bullish candle and then your two bearish candles following it down. This is a swing high. This is a perfect swing high right here. Let me mark that out. That's a swing high. That's a swing high. Now, folks, this is the simple way to identify swing high and swing lows in the marketplace. Please, if you have any question, you can you can ask your question in the comment box, or you can send a message to me on Telegram. Let's move further. Alright, folks, back to this example. I believe by now you fully understand how to identify your swing highs and your swing lows in the markets. Now, folks, for this to be able to work out for you to be able to identify these swing highs and swing lows in the marketplace comfortably, you must practice. You must practice all I have taught you. Now, please take note. As like I said before, swing highs and swing lows occur in any time frame, whether it's the 5 minutes, the 1 minute, the 15 minute, 30 minutes, or the daily, even on the monthly or yearly chart. Okay, swing highs and lows occurs there. Okay, now let's proceed. Now, you might be wondering why swing highs and swing lows are formed. It's quite simple. A swing high and swing low is formed due to what is known as support and resistance. Now let me explain support and resistance to you guys. Now, a support is um, an area whereby on the chart it shows tendency to stop falling, and then a resistance is a point in the chart where it shows the tendency to stop rising. That's swing highs and swing lows. Okay, folks, we are back to the example. Now, folks, I want to use this opportunity to explain support and resistance. Now, I know most of you're familiar with support and resistance theories. Now, for the sake of the newbies, I'm going to identify support and resistance levels. All right, take a look at this high. This is a resistance. The reason why it's a resistance is because it showed the tendency to stop rising. Okay, there's a struggle here, and then you see a move down. This formed a resistance. It showed the willingness to stop rising, and then it fell. This is a resistance. This is a resistance. Every high you see here is a resistance. Every high you see here is a resistance. Okay, they are all, the highs are all resistance. But please note, not all highs are highs. Highs that have swing, highs that have swing highs are identified as swing highs, and they are still resistance. Then highs that does not have any swing at all, they are just regular highs and they are still resistance. Okay, all highs are resistance, but I am trying to teach you to identify swing highs and regular highs. Okay, now let's go to the support. Like I said, support levels, these are this is the level where it gets to on the chart, and it shows the tendency to stop uh, to stop uh, falling. All right, folks. Uh, as I was saying, now support levels, they are levels whereby on the chart it shows the tendency or the willingness to stop falling. This is a support level. This is a support level. This is a support. These two levels here are also identified as support because it showed the willingness to stop falling right here. There's a struggle. So these are all support level. All lows on the charts are support levels. But remember, not all lows are swings and not all highs are swings. Okay? So now that you're able to identify swing highs and swing lows, let me teach you how price reacts to them. Now I'm going to draw this low right here. I'm going to draw it out to this point here. Alright. Alright, folks. Uh, Now, um, the market reacts to swing highs and swing lows. That is, I mean proper swing highs and proper swing lows. Whenever a swing low is spotted out or is identified on the marketplace, price will always run towards that level. And whenever price gets towards that level, there will always be a reaction. There will always be a reaction. Take a look at this low that I marked out here. This is a swing low. Price ran all the way into this low, and then we had a rejection to the upside. Now this is a very, very beautiful rejection right here at that swing low. Now if you look at this other swing low right here, this other swing low, you can see how price reacted to it here. But based on the fact that it's just a range, it's just a consolidating market, and there is a parent low. This low right here is called a parent low. Okay, it's a parent low. Price has to get back into this low. Okay, it goes back there to retest, and then once it retests, you can see the sudden move away. Now, folks, I want you to consider something. Whenever you're trading and you're, let's say on your daily time frame, you're bullish. Let's say on your daily time frame you're bullish. Whenever market creates a kind of like a move like this is what you need to do. First, you identify the high of this market. First, you identify the high like this. You identify the high. You identify the high, and you identify the lows as well. Now, after identifying the highs and the lows, you ask yourself, which of these lows, which of these points I've marked out is a proper swing point? Now, as you can see here, as you can see right here on that low, that is a proper swing point. And let's say on your daily time frame you're bullish, you will see how price will come back to this parent low. Now it can come back to this point and it will react, sure, but always take the parent low. It comes, you can see how price gets to that level. Now you can be a buyer at that level, and then your stops will just be, let's say, 20 pips away, and then you can see the move up. Now this high that we can see right here, based on the fact that it's not a swing high, price did not react to it. You can see how price broke through that level. If this high was a swing high, let's say we would have probably had a ranging market. The market would just be moving sideways from resistance to support, from resistance to support, in kind of like a ranging form. Okay, now in my next video, I'm still going to probably properly explain how these highs and lows, how swing highs and lows, how the markets react to swing highs and lows. But for now, please take note of this example right here. Okay, take note of this example right here. Take note of every single detail which I have given to you in these videos, and I promise you, by the time you begin to watch and practice them, you will become really, really great. Rome wasn't built in a day. Okay, so guys, please, I would like you to subscribe to this video and share it to your friends. So in my next video, I'm going to continue explaining how price reacts to swing highs and swing lows. Please, if you have any question, you can ask in the comment section below, or you can send a message to me on my Telegram. So folks, until next week Saturday, I wish you good luck and good trading.